What is going on, guys? Today we're going to talk about the big news of the week, what everyone is talking about, and that is the inflation report, which comes out this Friday. So we're going to take a look at an article that kind of discusses some of the things that we're expecting to see. They've ran some of the data, they've looked at it, and basically what they're kind of expecting to see from inflation numbers. And then we're going to take a look at the chart over the last few months, last couple of years, see what inflation has done, and then kind of give my prediction for what I think is going to happen and how the market's going to react to that. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. So as I mentioned there in the intro, here we have the US Bureau of Labor and Statistics official website. It's .gov. And what you can see if you look up here, you can always see when they released the inflation report for the previous month. So obviously in June 10th, which is this Friday, at 8:30 a.m., they are expecting to release the May 2022 inflation data. And then you can look forward, it's always around the 10th. So you have the 13th of July, 10th of August, 13th of September, 13th of October, 10th of November, and then 13th of December. So you can always look forward, see when inflation numbers are coming out. These are going to be good, big numbers and big events for probably the rest of this year, unless we see a drastic change in what people are focused on. So it's always good to keep this in mind when you're making trades, because it's going to basically at market open be released, and people are going to know this, and it's going to affect the market. So it's important to know this and know this before you're making any trades, especially if they're short-term trades, and even if they're long-term trades. You might want to trade a little bit before or after these events to get either basically hopefully get a better deal on whatever stocks you're looking at. So here's the article that we're going to be taking a look at today, and it is 3 key indicators showing inflation is poised to ease. So basically this is kind of a little bit more of a biased article where they're looking at, they're kind of seeing things that the inflation is going to be easing over this next period, and we're going to see a number that's basically lower than I think that 8.3 number that we saw previously for the April numbers. So here, if we immediately kind of jump down here, they're already talking about some of the benefits that we're going to see, or that they think we're going to see in this report. So here, the first thing is semiconductors, and a lot of the things, in my opinion, in this article are more long-term things, even kicking off with this semiconductors. So semiconductors, they're talking about how this goes into PCs, cars, light bulbs, basically anything, and it's down 14% from this same time last year, which is obviously huge. So that is a huge move. But the thing is, this is a very slow moving market, right? You're producing these parts and getting these parts in, you're getting the chips in, and then they're going into these different other units, whether it's like drives for motors, cars themselves. Chips are basically in everything now, computers, PCs, whatever you have a chip in it. And a lot of these things, yes, these prices have gone down, but they might purchase chips a year out and then purchase these slots of production on these chips, and then they aren't actually going to be affecting the consumer until those goods are actually released, right? Because basically PC prices, they're not going to drop the price of a PC if it costs them $500 to make it, but now all of a sudden it costs them $450 to make it. They're not going to drop the price on that just because they're getting a bargain now on their chips, or not a bargain, but spending less money on their chips than they did a year ago. So that's important to keep in mind, that this is more of a long-term thing, but it still is a good trend to be seeing in the market. The next 2 things we have up here highlighted are also super important, but they also have kind of more longer term, implications. So the first one up here is shipping container rates. So shipping container rates have seen a 26% decline since September of 2021, which was all-time highs. So that is huge, right? Because everything is getting shipped all over the world, whether you're shipping internally or shipping, overseas. This specifically is shipping containers overseas. But even with that, right, if there is an increase in that shipping price, there's generally an increase that you see in pricing for across, trucks, basically semi trucks. So you're seeing, right, a huge decrease there for shipping containers, which overall is going to benefit consumers, especially, Apple, they produce all their phones overseas. So it's huge, right, to see that price decrease that doesn't need to, now that price doesn't have to be passed on to the consumers. So hopefully we see some of these costs going down, especially for food and some of these basic resources, which we're going to get into here with this next bullet point of the price of fertilizer. So the price of fertilizer, basically since the Russia invaded Ukraine on February 24th, it's basically 24% below its record highs that happened in March. So that is huge as well, right? Because fertilizer, right, all of your food is being produced, farmers have to purchase fertilizer. I've even heard from people, in my own life, that farmers have been spending ridiculous amounts of money that they haven't ever seen before on fertilizer, and that cost ends up getting passed on to the consumer very directly as well, because, right, they are charging more for their grain or whatever it may be, and then the company that has to purchase the grain and turns it into a loaf of bread has to basically charge the consumer more for that loaf of bread. So this is huge, but it's also a downline type of indicator, right? Because if you plant crops and you fertilize your crops, it might take you, 3, 6, 8 months or whatever to actually get to harvest those crops. So that cost is not, at a snap of a finger right there for consumers. We don't see that 24% drop immediately. It's going to take time for that to actually develop and occur, and trickle down basically to the consumer. Here we just have more of the same. So we're, again, talking about semiconductors and all the semiconductor chips that go into all these cars. So one of the first things, if you remember back at kind of the early stages of kind of all the inflation talk and everything going on, is car prices started to soar, especially used cars. And now finally a lot of these car companies, if they can start, getting the chips in that they need, that'll be huge, right, for driving down pre-owned car prices, but also making new cars a lot more reasonable. And this is huge, not only for the fact that, right, there's going to be more cars in the market, so car prices should drop, but you will also see, right, a lot of these businesses, as they get more of these chips in and they become, right, more readily available, they can increase their production output, which means, generally speaking, that they're going to have to hire more employees. And the more employees that they're hiring, the better off, those people are going to be. They're hopefully going to be making, larger salaries because they're going to be hired on to, good companies like Mercedes-Benz and BMW, things like that. So overall, that's a huge benefit to the overall employment of the country and of the, the overall world, which in turn helps the economy. So that's huge in and of itself, and it's something that people don't always think about. The next thing we kind of have down here is, again, more of the container. So they're talking more specifics, and basically they're talking about the specifics of container prices right now. So they have about 7,500, I'm just going to round that number to, for a 40-foot container. That's still high, but or 18% higher than the same time last year, but it's down from its September high of 10,000. So that's huge, and that's a benefit, again, which is a longer term type of thing, because a lot of those containers, again, if you remember, right, they got stuck in California ports, they got stuck in ports all over the world, basically China especially, and a lot of those pricing of that goods is what we're seeing probably now and a few months ago. And as these new prices kind of actually start hitting customers over the next few months, we'll see things kind of start to turn around. And then the last thing up here just bounces back to fertilizer. So they're talking about 1,000 in June. Fertilizer was around $1,000 per metric ton, and that's a 30% drop from in May, when they took a spot load price of $1,425 per metric ton. So again, 30% drop there. That's huge, but it takes a little bit of time. That's kind of the underlying message. A lot of these things that they're talking about in this article, they're seeing a trend in the right direction, but it takes time for it to get to the consumer, and that's important to understand. I wanted to touch on one last thing that could affect the inflation number here coming up on Friday in a big way, and that is gas prices. So gas prices have gone up a crazy amount, and I'm sure you're all aware of it and have seen what's going on, and it's insane basically how much gas prices have gone up. And what we're seeing is almost $5 per gallon nationwide. And that's a crazy number to think about, and that will have a big effect on the inflation numbers that we're looking at. However, that's kind of a little bit more, I'm not going to say recent, they've been high for a while, but this more like meteoric kind of increase, vertical almost increase, has happened over the last few weeks. So that number will affect some of the end of May, but it will, if it kind of continues on that, could affect a lot of June. When we see June numbers actually released in July. So it's nothing super concerning from this report, but it'll be something to keep in mind that if we don't see it turn around here in the next few weeks or week or so, that it could have a big effect, and we could actually see a slight increase or a leveling off of inflation in the July report. So that's, again, just something to keep in mind. The good part is the kind of this first line that I have highlighted here in this article, that a lot of consumption has actually dropped. People are cutting back from driving, they're cutting back from making those extra trips because of that additional cost there, which is a good and a bad thing. The good thing is, right, they're saving money, gas prices should drop down because demand has fallen off. But the bad thing is, right, those people were going to a place probably to spend money. They were probably going out to eat, probably going to the grocery store to pick up some ice cream or something in the middle of the night, whatever it may be. So they were making trips to probably go somewhere and spend money, and that means that money is not getting back into the economy. So a big thing that needs to happen over the next few weeks to month or so is the dropping of gas prices. That will be huge and help the economy tremendously. Last thing I wanted to take a look at here is the chart for inflation, and this is over the last 20 years. And again, we're back on the Bureau of Labor and Statistics.gov, so official government website. We're looking at kind of the statistics and what we've seen over the last 20 years. Back in April, obviously we had the downturn from the pandemic, and then inflation just kind of shot through the roof, and we've seen it go up, and we saw a little downturn in here back in June, July of last year, and we're almost kind of seeing a repeat of that. So March we had 8.5 inflation, and we're down in April, or went down in April, to 8.3. My guess would be, and based off what we just looked at and some of the things that we're seeing out in the economy, is we could see this go down. I'm predicting that it's going to go down a fairly decent amount, because we're going to be looking at year over year numbers compared to where is June. So June is 5.4. So we're finally getting comparative numbers to what's relatively high. We're seeing a 5% number. So this is 1% higher than the April number compared year over year. So that's going to be a huge thing to consider, that we're comparing a big number now versus what is still probably a big number, but we could easily, just because of that comparison, see inflation numbers drop. I wouldn't be surprised if we see like a 7% number start getting down below that. I think the economy or the stock market will overall react very positively if we do see something like that. But also, I wouldn't be surprised if we see something level. I would be a little bit surprised if we see a number that actually jumps. I would expect if gas prices keep going up and we see something weird happen over the next month, we might be able to see a jump, but I would still be surprised by that next month, because we just kind of keep comparing larger and larger numbers, and it's hard for those numbers to keep compounding on each other. But yeah, that's not necessarily a good thing, but it's something to consider, and to understand that the market is going to react generally in a positive direction if they see these numbers falling year over year. So as long as we keep kind of going down and trending in a downward direction, I'd kind of expect the stock market to react in a positive way. So that's kind of my take on things. Obviously, I don't short-term trade, so I'm not going to be putting on a trade just expecting inflation numbers to come in well and then trying to capitalize on a quick move in the market. I don't play that game. I'm a long-term trader. Generally speaking, I trade a little bit of options here and there, but nothing short-term expiration even when I trade options. So again, this is all my opinion. Make your own kind of decision on things. take all the data, take everything that is out there, and make a decision. And if you want to stay on the sidelines, that's perfectly fine. If you want to get in and make a couple trades, then do your own research and make a trade wisely, basically, is what I'm coming down to. So overall, I hope you enjoyed the video. If you did, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. And as always, have a wonderful rest of your day.